Hi traders, it's Eddie here from TradeView. There's a reason most trading strategies don't hold up. It's not the strategy, it's the layer that sits underneath it. Most traders never define this. They go straight into entries, exits, indicators, and things like that without ever understanding the structure that they're trading inside. Basically, what they're doing, they're using things like indicators, and they're placing trades based on this. Buying and selling based on indicated levels. But what we do on the desk, everything starts with structure, direction, and how far price has already moved. Let me show you. So what we're looking at things like this. We're looking at price movement. We're looking at structure like levels, price levels. And what happens when price breaks through these levels? How far do we anticipate price to move? Because once you understand this, now you know when a strategy should be active and when it shouldn't even be trading. And that's the difference. This year, we're giving you that framework. Not a simplified version, not a concept. The actual core framework that we use here on the trading desk. But we aren't going to stop there. You need high quality models to run within the framework. And over the last 9 conferences, we've had some of the best traders in the world present ideas, models, and concepts. And this year, we've taken the strongest of those and rebuilt them on top of this framework into 10 complete models. So for example, we might have model 1 could be a breakout model. Model number 8 could be a trend model. Model 3 could be a mean reversion model. Model 5 could be a scalping model. And so on. And what we're going to do is we're going to run them inside of our core framework. So effectively what happens is all the models connect up to the core framework which controls them. So it's going to control things like exposure, like trade management, like trailing, like entries and exits. These aren't ideas and they're not theory. These are models you can actually run. But more importantly, you'll understand when to run them, when the market supports them, and when to scale them up and when to shut them down completely. For example, some types of models, trend type models, will work in trending type conditions. So when the market looks like this, particular types of models are going to run in a particular type of way, and other types of models aren't going to run. In more of a chopping or sideways market, particular type of models are going to run at particular times. We're going to try to get them to go long here and short here, for example. Okay? And they're going to be different types of models that work well in those conditions with different rules than the types of models that will work in trending market conditions. And then when the market is extended, it will look something like this. And again, different types of models will work in these type of conditions. For example, our core model will tell the other models not to go short against these type of moves. That's where a lot of traders get caught out. So many traders trade for a very long time without ever seeing the full picture. Okay, it will basically take them a lifetime to even try to build something like this, and even still, they'll never get there. Okay? This is the full picture. We start with the framework. Then we introduce the right models at the right time. And once you have that, you have full control. I'll see you at this year's conference.